Living a life free from financial problems and restrictions is what everyone dreams for. Building financial freedom that does not stop you from taking vacations when you wish for it, paying for luxuries that you and your parents wish to have, giving back all the love and comfort you receive from your family by fulfilling their dreams is the ultimate goal of every loving human being. Well, I ain't here to sell you dreams, but to hold your hand and take you through the reality of financial freedom, to share with you everything you need to know about getting financially free and living the lifestyle you dreamed of. And this is not gonna happen through any course out there in the market, but through continuous efforts and knowledge acquisition. It is not that hard as well. So today, I'm presenting you the Road to Financial Freedom series. Well, this might seem to be a free content at first, but this ain't free. This series will cost you prime attention and willingness to learn stuff. You need to master some simple skills for financial freedom, and your dream lifestyle will just be a side effect. Alright, we'll start the series with the power factor, money. The better you know about your money, the better you can work with it. You'll first need to build a plan for your money. You'll have to develop the habit of calculating and figuring out how much money comes in and how much money goes out. Reason to this is a majority of people think they are doing good with their money only until they figure out that they are just building on their debts. A majority of Americans spend $1.20 for every dollar they make, thinking that everything is running smoothly, but only until they realize that they are trapped into a huge burden of debts over them. Now the action I want you to take is, take a piece of paper and draw 3 columns on it. Name those 3 columns as income, expenses, and where the rest of money is going. It can be investing, savings, charity, or anything. The goal for this drill is to make you aware about your money. Now once you have figured out where your money goes, I want you to keep that piece of paper with you and repeat this exact same drill at the end of every month. Start filing those papers into some files. Very quickly you'll develop the habit of bookkeeping your money flow, and that way you can track your progress in the journey of your financial freedom. We need to master the skill of keeping records to actually master the game of money. The next part will be outsmarting the banks. Alright, the second level for financial freedom is outsmarting the banks. First of all, we need to know that the actual business of banks is lending you money and keeping you under the dates. That's the way they make money. Now don't consider this as a red flag and stop dealing with banks. Instead, learn to use those banks for your advantage and outsmart the system. Now I need you to have 2 different bank accounts. One will be a checking account and another would be your savings account. To define them, you'll use the checking accounts to meet up with your daily transactions and money requirements without having to touch your savings account. And the savings account, as the name suggests, would be your piggy bank where you save up your money for some bigger purchases, like a down payment for your new home or a new car. I would actually suggest you to maintain 2 different savings accounts. One would act as your piggy bank for bigger purchases, and other would be something I call emergency funds. The money you save here might help you in your bad times, like if you lose your job or in case of some tragedy. Now another benefits for these saving accounts is interest. However, the rate of interest is not something that will make you rich, but it's never bad to make some extra money, right? A suggestion I'll make is go for these online savings bank accounts, as they provide a higher rate of interest than those offline branches. The next thing I want you to do is ask your banks to automatically transfer a major part of your paychecks to those savings accounts. In this way, only a part of your paycheck stays in your checkings account and you don't end up losing all of your money on some fancy purchases. In this way, you get into a habit of controlling your desires, as you now have only a limited amount of money to spend and thereby build a discipline in the money saving habits. Encountering date the devil. To clear things first, I'll say that not all the dates are devil, but yeah, most of them surely are. First of all, you need to pay off any of these high interest date burdens if you have any, and if you don't, I warn you to stay miles away from them. Don't focus on anything else like investing your money in some hot stocks or making a new purchase. Your clear and laser focus should be clearing off any of those high interest dates first and stop fueling purchases that keeps pulling you towards these high interest dates. I would ask you to get rid of any credit cards if you can't control your purchases and only begin using it once you clear all of your existing dates and only after you develop the power to control your purchases. Remember, high interest dates are devils. The real game begins. Building wealth has to start with investing and not just pinching pennies. You can go nowhere near to your financial freedom dream if you don't emphasize enough on building a strong investment portfolio. Now you don't need to panic, we are here to help you out. You can easily start investing with literally no risk, and that is by paying off your existing debts faster. For example, suppose the student loan you hold has an interest rate of 6%. Now if you pay off that debt 2 years earlier, you are indirectly saving your 6% interest that you would have to pay otherwise, thereby making a 6% gain without any potential risk. Now if you study a little, there's this thing called ETFs. I would surely drop a brief video on ETFs shortly, but for now, ETFs are a group of stocks that you can invest in. For example, if you think healthcare has a strong potential in coming few years, you can hold healthcare ETFs. Basically, you can hold a group of stocks from the same sector instead of buying an individual stock, which is a much more experience-based task and requires advanced knowledge of the field. Do not worry about any of it for now, as this channel will share everything you need to know about financial knowledge and stocks. All you need to do is subscribe this channel right away so that you keep receiving the premium course quality content for free. You know I deserve this. This was just part 1 of our entire Road to Financial Freedom series. Make sure you check out the next video where we'll continue from the investing checkpoint. Grab every bit of knowledge that schools and banks don't want you to know. Once you get familiar and friendly with ETFs, now you can slowly and deliberately start getting into stocks. Remember, you're just a search away from learning about stocks and other financial tools. If you think stocks isn't for you, real estate is something that might fascinate you. The fundamental is similar to stocks here. You buy a piece of physical asset for cheaper, and once the value of the place increases, you either sell that piece of asset or simply continue to rent it out, building passive income. Well, we'll discuss this stuff in more detail in the upcoming future videos. For now, you need to understand that real estate and stocks are something you have to consider and learn about if you wish to live a luxurious lifestyle. Because once you learn this game, then the money will start working for you, unlike the majority population that works for money. We'll start right from where we stopped in the last video. But for the new viewers watching this video for the very first time, I'll request you to watch the previous video so that you can get into a financial freedom zone and vibe with this video more effectively. Alright, now let's begin. In the previous segment, we emphasized on the importance of investing in the journey of financial freedom and the importance of learning to invest in stocks and real estates. Now, we'll dive a little into how you should manage your money in a way that it benefits you the most. The real secret of spending. Now, this is where the majority of the population gets messed up. And this is the same spot which Robert Kiyosaki, the famous author, published the book Rich Dad Poor Dad on. This exact spot can be concluded as spendings. I need you to answer me. Think of your dream home and your dream car. Now answer me in the comment sections below. Will you buy it right away when an ample sum of money comes in? Of course, right? This is what you have strived so hard for, your dream home. Just like any other guy, you'll save up the down payment and apply for a home loan. And boom! You have got into the biggest trouble for life. A loan for the next 30 years of your life. That will continue to take money out of your pockets for the next 30 years and you cannot do anything about it. Well, if some of our viewers found it silly, this is what the majority of the population does in reality. Now, what should be actually done then? To answer the question, we'll need some whiteboard work. First of all, we'll need to understand the vital difference that almost every student has learned. The difference between assets and liabilities. Come on, stay with me. Assets are something that puts money into our pockets, and liability is something that takes money out of our pockets. The day you understand this simple statement and bring it into the practice, you will start getting wealthier. You need to spend your hard-earned money on purchasing assets, example of which could be real estate properties, royalties, stocks, bonds, copyrights, etc. These assets will then continue to bring in more money to your pockets in the form of rental income, royalties, dividends, interest, etc. But what the majority ends up doing will seem stupid to a 8-year-old kid. They end up spending all of their hard-earned money in purchasing liabilities that will take money out of their pockets over and over again. For example, they end up purchasing a car, something that will take money out of their pockets and now has a depreciating nature as well. Also, it brings in more expenses like fuel charges, maintenance cost, service charges, insurance premiums, and much more, all of which will take money out of their pockets. This not at all means you should never purchase those luxurious liabilities. I'm gonna share you the ultimate secret of wealthy guys, which you need to follow as well. If you wish to buy luxurious liabilities, you need to buy equivalent assets first. And once you have bought those assets, only and only then you are allowed to buy those lavish liabilities. As then your hard-working assets will pay off those liabilities and you can enjoy them without any hassles. Consider credit cards as colleagues. Credit cards might cause serious trouble if you don't know how to use them properly. But if you learn the game of using credit cards, they can prove to be your biggest allies. To learn the game of using credit cards correctly, we'll first need to learn how credit card companies makes money. Alright, so a credit card company makes money when you swipe their credit cards, wherein they charge the store owners a part of total transaction, for instance 3%. And this is the exact reason they can afford to give you a cashback of 1 to 2% every time you use them. I'll elaborate. Let's say you go to a nearby supermarket and make a purchase of $300. Now you use your credit card to make the payment. At this point of time, the credit card company will charge the supermarket owner a 3% charge as a transactional fee for completing the order. Now out of the $9 the CC company just made, they can afford to give you a cashback reward of $4 to $5 just for using their credit cards. Another way of those CC companies making money is through APR. This is the actual business model for money making. Assuming you were unable to pay back the $300 credit of the supermarket on time, now those CC companies will charge you a high interest rate on the credit that you owe to them. You can consider credit cards as a double-edged sword. If you can control your purchases, buying things that you can actually afford and are capable of paying the credit back within the given period of time, only and only then practice swiping those credit cards. If you use it correctly, it can prove to be really beneficial, but if you act immaturely and spend credit carelessly, you'll find yourself stuck under a big load of high interest rates. With money comes taxes. In this world, two things are inevitable: death and taxes. No matter how hard you try to run away from them, you gotta face it someday. Well, death is something completely out of human control, but fortunately, taxes are. And if you think that you are not obliged to pay any taxes, you still have to file tax returns and deal with it. If you are just a normal 9 to 5 guy, you will have to get tax returns filed, or else you are breaking the laws and can be punished. Don't worry, all you need is a local chartered accountant who will help you with taxes and stuff. And if things are a little sophisticated for you, in case you are a business owner or belong to the high income end, you'll need a professional who can look after all of your tax work and benefit you to the possible extent. As we have already discovered that death is inevitable and the reality that everyone has to accept, we cannot do anything about it. But something that we can actually act on is making will or trust. Think about it. After a guy passes away, what happens to his estates and properties that he owns? He'll surely wish to pass it on to his future generations. Well, if he makes a will, things get better for his family, or else they'll have to rely on judiciary decisions. In many cases, conflicts break out after the death of the owner, where his successors start fighting for the estates and end up filing cases amongst each other. A will makes things much more convenient and ensures smooth running of the family even after the person passes away. I would also like to add the point of importance of an insurance. Having life insurance is as important as having health insurance. Insurance minimizes the risk and impact that a tragedy might cause. A healthy human being can get life insurance for a premium less than $30 per month and can have a sum assurance of up to $1 million. Planning those things are equally important in the journey of financial freedom. Let's talk about money. With all the supporting pillars known, now we can talk about money. I know this video will have less views and engagement compared to the first video of the series, and this will be because financial freedom is not for everybody. Many will give up in the first part itself, rest might give up on the other half, but the one who will truly succeed is the one who will stay and learn till the end. Financial freedom revolves around money. Before starting anything, let's first understand what money actually is. Money is an economic unit that functions as a generally recognized medium of exchange for transactional purposes in an economy. To conclude, money is nothing but a tool that will help you reach towards financial freedom. Common sense check. Now earning more money will result in reaching the freedom goal faster. To earn more money, what things can be done? You can ask for a raise in the existing job, that's the easiest way. If you are serious, you can actually start a side hustle or work in a secondary part-time job for some extra bucks. If the online industry is something that fascinates you, you can learn a high-income skill like copywriting, web designing or advertising and then charge for those services. If you go out thinking of how to make more money, then the sky's the limit, my friend. Only advice I'll share with you is stay consistent and focused with anything you do and you shall succeed. For now, I, your host, conclude the first chapter of Journey to Financial Freedom and invite you to quickly jump into the next chapter by clicking on the I button here or in the description below. But before that, quickly smash the subscribe button if you haven't already, and I'm waiting for you in the next one, my champ. Welcome to the second chapter of the Road to Financial Freedom series. After covering the point of how to build a plan for your money and assuming you're taking required actions as asked, I'll have to congratulate you first. Congratulations for taking action and breaking the mediocre mindset. And welcome to the minority mindset. And for the fresh viewers watching this video of our series for the first time, I would request you to watch the previous parts of this series and then watch this one. And for those who are not interested in building financial freedom and just want to understand date and make money out of it, we'll begin right away. To start off this video, we'll have to understand why date exists in an economy. Date exists simply because it accelerates the growth in an economy. When you are using date, you are simply using your future income and spending it today, whether it may be for purchasing an asset or a liability. And then you'll spend your future income to pay back the date. Now when you go out in metropolitan cities, you can see date worth billions and billions of dollars around you. All those big skyscrapers and real estates, all of them are built on date. Simply because no property developer has billions in liquid cash to build those estates. And why would a guy spend his money to build wealth when he can use someone else's money to build his wealth? And it is completely alright. Economy works that way. But if you don't understand the game of date properly, you'll get trapped into a sand dune of date. Coming back to the property developers example, now the way they'll make money and build wealth is, firstly they'll build real estate properties with date, and then they'll start paying it off through rental incomes, keeping a part of the profits with themselves. This way, they'll soon pay off their dates and possess a cash producing asset without spending a penny of their own. Well, it's definitely not this simple, but you get an idea, right? Let's consider another example. You in this scenario are an owner of a sweets shop with about 15,000 in your bank account, and surprisingly you get a giant order of $50,000 of sweets. Now this order can prove to be a game changer for your business, but unfortunately you don't have enough funds. You can either let this opportunity slip or get a short loan for the production of the sweets and pay it off after the order completes and bring home a big chunk of profits. This is the exact reason why date exists. We'll take a last example and move on to our next point. Let's go back to the property developer example. Suppose you are a developer and found a great opportunity at a great location. You go to the bank and ask for $1 million to raise the funds for estate development. Bank agrees on the point that you will pay $50,000 annually. Now here's the game changer. You will receive about $80,000 in rental income annually. Now even after you pay back the $50,000 date annually, you will be left with the whopping profits of $30,000, and eventually you will own your own piece of asset once the date gets paid off. This is how you will build wealth. You can simply understand the concept of date once you understand the difference between good and bad date. A majority of population gets scared when they hear anything like dates and bank loans. And the one-liner reason is because they buy liabilities with their dates. Let me elaborate. A date can be divided into two parts: good dates and bad dates. Come on, stay with me. Good dates can conclude purchases of assets or investments that will bring money to our pockets, and bad dates include purchases of liabilities which will tend to depreciate and take money out of your pockets. For example, buying a brand new car, buying luxuries, spending credit on Gucci wardrobe, etc. Now all you need to do is spend your money and borrow dates for purchasing these good dates, which are assets simply, and avoid credit purchases of any bad dates. The reason I am pressurizing on the need of buying good dates because you don't need to pay back the dates through your pockets, because those good assets tends to hold the potential of paying off their dates on their own through the income they generate while maturing. For example, if you raise funds for raising a rental property, the rental property itself will pay off its dates through the rental income it generates, and it will never cause any trouble to you if you do things correctly. Holding good dates is the ultimate secret of building wealth and getting rich. To conclude, if you want to get wealthy, stay away from bad dates and pay off those bad dates quickly if you have any, and focus on building assets and possessing good dates. But sadly, what does the majority do? They simply buy liabilities through dates and spend their hard-earned money on paying it off for the years to come, thereby surviving on a paycheck-to-paycheck basis. No passive income, no wealth building, and thereby no financial freedom. Well, this plan might seem pretty easy and easy to replicate, but it's not that easy peasy. Let me show you the other side of the reality as well. Now, as you know, good dates can actually make you wealthy, you should also know that if done incorrectly, it can taste pretty sour. I have seen many cases wherein good dates turned pretty bad for investors as they did not manage their dates properly and didn't have a right approach. Try understanding this. Date is just like any other tool. If you know how to use it properly, it will benefit you. But if you don't, it will backfire in no time and cause a lot of damage to you. Let's discuss a scenario. With a good credit score already, you ask for a loan from the bank to raise funds for a rental property. The bank sanctions it and you're doing pretty good till now. Your tenants come in and starts paying off the dates for you, but all of a sudden the tenants stop paying off the rent and causes trouble. Now those sweet and gentle bankers will start showing their true colors. A lot of pressure and warnings will start showering at you, forcing you to sell off the asset piece to pay off the dates ASAP. All your plannings will seem ineffective and you might mess it up, resulting in selling of the assets for half of its market value or many times even less than that. I would also like to enlighten you with the reality that there is a different industry of investors waiting eagerly for you to get messed up, after which they'll come in and purchase your assets for half the price and make big profits out of it. This is how the world works. The same goes with business sector. If a business gets a loan of $1 million and pays it off at time, then everything is pretty fine. But if it gets messed up and gets unable to pay off its dates at time, this same group of investors may come in to buy that business for pretty cheap than the market value, and the business owner has to sell it without any other option available. The reason I wanted you to know this is to make you understand that dates can be sweet and sour at the same time. It's just another tool and not any spell that will make you wealthy. You need to learn to use date to your benefit properly and master it first. Also, relying only and only on date is never an option. It should be used just as a complementary hand that makes things a bit more easier. That's it. All I want you to do for now is subscribe to this channel for now, and we'll soon start dropping videos on the things discussed above. I don't want you to miss out on this quality content and chance to get financially free. This was just part 1 of chapter 2 of the Road to Financial Freedom series. Take a couple of minutes to digest what you have learned and then dive into the next chapter. I'm waiting for you there. Remember, I believe in you and you should as well. How come the rich gets richer and the poor turns poorer? What is the ultimate secret of these wealthy guys that they don't want you to know? To be honest, it's not a one-liner secret, nor a top secret scheme. It's just a system put together which ensures that a rich guy continues to build his wealth, and this is the exact process that a poor guy ignores and stays broke for life. As you are watching this video today, you will get to know the ultimate secret process that this wealthy guys practice to keep on getting richer, and this exact blueprint will make you a wealthy guy as well. So stay attentive for the secret. Before I unleash the secret for the new viewers, I want you to check out this entire series from the very beginning, so you can get a better understanding of every step that we'll discover in the coming segment of the video. And for my honest old viewers, we are just one video away from completing this Road to Financial Freedom series. To understand the secret, we'll have to start from the root level. In a developing country like India, the success of a person is calculated by his profession. I'm pretty sure this applies to every nation and civilization across the world. In our India, if an individual happens to be a doctor or a lawyer or an CA, he is considered to be successful. Reason? Practicing his profession will bring in money in the house. This is where the entire society gets wrong. They decide the success of an individual merely from his professional degree, irrespective of his reality. I have seen many doctors living an ordinary life. I have seen lawyers working 7 days a week with no days off. And I have seen CAs getting stuck in 9 to 5 jobs as well. It all comes down to one question. Is the individual financially free? Does the money keep rolling in if he stops practicing? And can he sit back and enjoy his life without any financial worries? The answer to all of which is exactly a big no. Then how come he is tagged as successful? Now I'll come to the actual point. Having a high-class professional career or having an average 9 to 5 job, both makes no difference if you don't have the right financial education. Let's understand. Here's the way the majority spends their paycheck or income every month. A big chunk of their paycheck goes to their monthly expenses, paying off their EMIs, buying some luxury and amenities, and if something is still left behind, they might then consider saving that money. To conclude, the diagrammatic representation might look something like this. However, what the wealthy guys do is completely opposite. A majority of their income goes to investments, then comes their expenses, and they might save the rest of money, which would look something like this. Now I know that this is not at all possible in reality because a bread earner has many responsibilities and he cannot just invest the majority of his money and let his family starve. But what he can do but never does is spending not more than 75% of his paycheck. investing a 15% at minimum, and saving up just 10% of his paycheck. This is completely doable. Spending 75 cents from every dollar you earn is what you need to do. And slowly and gradually, those 15% of investments rack up to a big amount in the coming years, and then you can increase your investments just like those wealthy guys. To conclude, it's not how much money you make, it's about how much money you can keep. This is the exact reason why lottery winners go broke within just 5 years of winning a lottery. Why professional athletes and sports players that makes millions during their career end up broke and surviving on pennies. The ultimate success relies on your financial education. Unleashing the secrets now will be the right time, as you are now aware of how important and valuable it is. Alright, the secret goes something like this. Let's start with tracking your money. The journey of building wealth starts after you develop the habit of tracking your money. You need to know where your money is going and how you can optimize it correctly. Let's take an example. Joey is a guy who makes $100,000 a year and spends about $120,000, unaware of the fact that his debt is piling up like anything and will soon come back to haunt him. On the other hand, his colleague Ross is a financially educated guy and knows the importance of wealth generation. He averages about $75,000 yearly and spends about $50,000 out of it. He avoids purchasing lavish liabilities and focuses on building wealth first. He invests $20,000 and saves the rest for hard time. Fast forwarding a couple of decades, you already know who wins the game and who gets the Rachel. Within 2 decades and a return rate of nominal 8%, Ross has built a wealth of about $1 million, and Joey, he is stuck under a huge burden of debts that will bite his ass like anything. So it gets pretty mandatory to track your money in the long term, or else you won't even realize how you got under such a huge debt trap. So being wise financially and keeping records of your transactions is where you will start. After you have inculcated the crucial habits of tracking your money, you will now need to build some shields. Yes, it is somewhat similar to what you are thinking. In the journey of financial freedom, you might face some problems that you'll need to tackle in order to move ahead. Hard times don't come with prior warnings. You need to have financial shields that will guard you when hard times kicks in. In simple words, you will need to save about 3 to 6 months of your future expenses. This cushion of savings will help you rescue through the volatile times. You might find this silly, but a majority of the American population doesn't even have $1,000 saved up in their accounts and will have to rely on credit cards if they get encountered by any problem. As you're building financial freedom, you need to focus on the right things like building wealth and calculating risk. And you will be unable to dedicate your complete focus on these crucial matters until and unless you have a cushion of savings that you can rely on. This same cushion will help you settle down a bit and gather yourself in case a hard time strikes you. With 2 right things fixed at the right place, now comes the time to rectify the destructive stuff. Yes, credit cards it is. I am not at all saying that credit cards are a pure devil in nature, but they can cause some serious trouble if you don't understand how to use them properly, and if you use them in the correct way, they are absolutely harmless and in fact beneficial to you. They come in with lots of perks and cashbacks and a lot of other benefits, but only if you use them correctly. I'll sum up this point very quickly with another perspective of mine. Let's say an average credit card company charges 19% of rate of interest annually, and according to some news research, it takes an average of 10 years for an American resident to pay off his debts. Now suppose you invested a mere $1,000 for 10 years at this 19% rate of interest. That would sum up to be a giant amount of $420,000 at maturity. This is exactly how your credit card company gets wealthy and keeps you broke. Now, as you have learned the game in a bigger picture, please make sure you avoid getting into any of those high interest dates and use credit cards only and only if you can pay back the money within the given time, and focus on paying off those high dates ASAP if you have any. Finally, things placed correctly in this system, now you can focus on working with your money. I'll say that again, work with your money and not for your money. You need to master your money and make it work for you instead of grinding your butts for that money. This is where everyone, including your parents and everyone you know, gets it wrong. The day you accept paycheck as your fate, you will get stuck in the rat race, my friend. Working a normal job is completely fine, but your prime motto should be to get out of it as soon as possible by building wealth. And the day your assets starts bringing in more income than your paycheck, you quit your job and make your side hustle as your main business. Paycheck should never be your goal, but creating wealth with it should be. Now, how will you make your money work for you? If you're assuming that stocks and real estates are the only way to make your money work for you, then you're absolutely wrong. Start with paying off your previous dates and get rid of any liabilities off your shoulders. Even your student loan should be paid off as soon as possible. Try paying off those student loans in bigger chunks and get rid of it faster. With no date headaches, now focus on investing on yourselves with different financial courses and seminars. Remember, investing in yourself would give you infinite returns and will never turn out to be a wrong decision. Focus on building your financial IQ and book some seats in real estate seminars and surround yourself with people who talk about money, stocks, assets, and things that interest you. With decent investment on self, you can easily start investing into stock market and start building wealth. If real estate interests you more, choose real estate as your primary focus. My advice will be keep your eggs in different baskets and build as many sources of income as possible. Remember, you'll build one at a time and only then move on to creating the other source. I see many rookies trying to create multiple income sources at once and getting messed up really bad. Remember, it's not a 100-meter sprint but a marathon race. The one who'll stay consistent over the long tenure will succeed easily. The system we just saw is the exact way wealthy guys build their wealth. But there is another little secret that you must not miss out. Let me elaborate. Think of a scenario herein you are assigned to fire up a dry grassland which is about 10 acres wide, and all you have is a hand fan to fierce the fire. It will take a long time for you to burn off the entire field. But what if you get access to petroleum and more flammable products? Burning off the grasslands will get much more easier for you. In the same way, if you focus on creating wealth only with your paycheck, it will take you multiple decades to reach your goal. You'll have to wait till your late 50s to enjoy the ultra lavish lifestyle you promised yourself. But the ultimate goal of this series was to make you financially free before your 40s and make your parents and loved ones proud of you. Don't worry, you'll reach there even before your late 30s. All you'll need to do is fierce the fire faster. In simple words, you'll have to start making more money without relying on your paycheck. The more money you make, the more you can invest, and the sooner you will reach your ultimate goal. Now, how to exactly start making more money? The last video of this series is completely based on this very topic. The exact blueprint of how you can start from almost no money and end up making $1 million will be discussed. I would like to remind you that this ain't a get-rich-quick scam, but a long journey of discipline and dedication. The blueprint will answer all of your questions regarding how much time will it take to make $1 million, how much efforts will it require, and it is going to be a step-by-step checkpoint based video wherein you'll get the ground reality check of making your first $1 million and getting closer to your freedom. The link to the video will be dropped right in the description box, or you can simply click here and watch the final video of the series. And I also have a small surprise for you guys there. Click on the video and I'll meet you there. In this video, we are gonna talk about making a freaking $1 million from just $100, discussing all the possible ways of getting there along with the realistic scenarios. The video will be a breakdown of several parts, each part representing a new milestone. We will go all the way from making the first $1,000 to making the first $1 million. Some key points to remember would be: A. You need to celebrate every time you reach a new milestone. The celebration gets luxurious and lavish on every next achievement. This reward system gives you the boost to work for the new milestone and won't let you get lazy. B. Manifestation and positive affirmations will be the key in your entire journey. When the hard times come, these superpowers will make things easier for you. And C. Finally, this ain't some get-rich overnight secret, but a long journey of building an empire and wealth for a lifetime. If followed with determination and concentration, you could get here in next 5, 7, 10 or 15 years. It completely depends on how dedicated you are. This method could be started with zero money, but for the sake of this video, let's start with $100 in your wallet. What are the things you could do that will make you an extra $1,000? The phone you are holding has the answer. Search for some survey that pays you. Jump in for offers that pay for getting some apps installed. Download apps that reward you with cashbacks when using it for shopping. It would be not only about making some extra bucks, but also saving some bucks. Cut off all the extra cash you spend daily. For example, grab coffees from local shops instead of Starbucks. Faking richness won't make you rich. Cutting off those useless expenses would save you a lot. Asking for a nominal raise. A nominal raise of 50 cents would make you an extra $100 to $200 a year. Explore new ways of saving and making a little more money. With these small tactics, you would be able to make your first $1,000 pretty easily. Here's something you need to understand. As the zeros in your bank account will increase, so does your efforts and risk taking will. If you are someone who wants to stay in your comfort zone and does not like growth, close this video right away. Making $10,000 has to start with investing. You'll have to learn the basics about investing in the stock market. Things like equity shares, bonds, how they work and stuff like that. Implement strategies like 50-30-20% rule, where 50% of your income would be invested in stocks, 30% would be savings, and the rest 20% would make up your expenses. Mere investments might not help. You'll need to start some side hustle like helping people moving lawn, cleaning cars and house windows for them, taking pets for a walk, part-time babysitting, or any such low-effort job that can make you an extra $5 to $10 a day and won't cost you much of your time. Like 5-10 hours a week is a good deal. Adding to it, start learning a high income skill like drop shipping, managing Facebook ads, website designing, or anything that interests you. You can learn all of it for free online. Once you learn the basics, charge businesses for your services, or you can even do it for free in the beginning. Once you build a good portfolio in the market, you can charge double for your expertise and make that $10,000 even faster. This plan would ensure that you end up making much more than $10,000 in the upcoming couple of years. Another point I would like to add is make sure you invest in trusted stocks and go with less risk for now, as the main motto of investing now is to reach that $10,000 milestone and not gamble. So now things get a little serious as we are talking about big money. That $100,000 is going to seem impossible from where you are standing now. But trust me with this. Once you reach the $10,000 milestone, you would have already possessed the most important and influential habits that will help you achieve that next milestone. And you would already know by then that $100,000 is not a big deal. Now how to reach that next milestone? As I already said, as you add zeros to your worth, the more you'll need to get out of your comfort zone. Important things first, you'll need to increase your income. I ain't talking about getting another hectic job. What I want you to do is put more focus on the high income side hustle that you started in the previous milestone and might have mastered by now. If you choose dropshipping or Amazon FBA, here's the point when you take things seriously. You'll need to scale that business. Dump more money on advertising, invest money into research and development, and focus on building a brand. Basically, think of it as a business now. If you're making double or more than that of your 9 to 5 job, now is the time when you quit that hectic job and dive all into your side hustle. The same goes with other side hustle like copywriting, web designing, SMMA agency, artwork, etc. Here's the time when you go all in. Next, you cannot think of getting into the six-figure club without considering investments seriously. At this point, you will take time out of your schedule for picking up stocks of the companies. Let's say 15 to 20 hours a week. You will shortlist 3 to 4 stocks after all the research and analysis, and this habit would quadruple your net worth in coming years. With investments done, you'll have to dump more of your profits and savings into your side hustle. That is your main business now, and try scaling it further. As your personal brand will start gaining reputation, your bank accounts will be prospered with profits. And considering you plan this strategy sensibly, the upcoming few years are enough to make this blueprint turn into a reality. By now, you would find the majority of financial advisors out there to be a silly guy. And this would be an indicator that you are on the right path. When you look back and see all that experience you gained, all your hard work and efforts, everything would seem worth it. At this point, when you have surpassed the majority of population financially, things get pretty serious. Your decisions decide your future net worth. It's more of your mind work than physical tiring hard work. The next milestone you are aiming for is not very far, but just a matter of time. The strategy here would again be investments. Not so surprisingly, you'll have to focus more on investments as it will create the real legacy and wealth for you. A game-changing secret I can give you that I heard Shaquille O'Neal saying was, once he heard Jeff Bezos saying that he invests on the ideology of whether or not the company will change the lives of people. And when Shaq followed that piece of advice, he quadrupled his net worth. What I mean to say is, invest much more time in picking up stocks, like say 30 to 40 hours a week, and pick 3 to 4 stocks that you think are revolutionary. And if any one of them blows, you would get filthy rich in no time. At this point of time, you actually don't need to work hard. The brand you built will start paying off. You'll just need to ensure maximum efficiency is optimized and continue scaling. At this point of time, your experience and expertise pays off. You can start consulting other businesses that might need your expertise, coaching businesses across the globe, writing books, publishing courses, starting premium podcasts, and these are most likely gonna be super successful thanks to your years of dedication and efforts that built an incredible credibility for you. With your brand value, you can easily charge a high ticket for the services you provide, and then it's just a matter of time of you making your first $1 million. This was exactly how you can turn that $100 to $1 million. And to be honest, you don't even need that $100 firstly to start this journey. This entire journey might take less or more than a decade, but will be filled with lots of crazy experiences that would put you on a roller coaster of emotions. Whatever scenario life puts in front, make sure to believe in yourself and the Almighty. He helps those who help themselves. Practice positive affirmations, and the power of manifestation will turn your dream into reality when fueled with dedication and consistency. Also remember to tip this channel a few grands when you make that $1 million. For now, subscribing to our channel and liking the video will do. I'll meet you in some other video. Till then, keep hustling. In this video, I would give you the exact blueprint of making $1,000 in dividend every freaking month. There's a lot of videos out there revolving around the same topic, but I didn't find any video with 100% transparency and based on the grounds of reality. If you are interested in making that $1,000 in passive income every month without doing anything, this video is for you. We'll discuss key points like how much money you will need, how much time will it take, and much more. So get focused for the next few minutes and stay till the end, as I have an exact blueprint of which stocks to go with and which one to avoid. Before diving into the blueprint, we must understand what dividends actually are. Dividends are the part of profits that a company shares with you just because you invested in their stocks and held them. Now the companies won't pay you dividends every month, as each company has its own terms of paying out the dividends. Some companies may yield dividends quarterly and other might yield them yearly. But for the sake of this video, $1,000 a month, I'm gonna say is $12,000 a year. So we'll focus on making that $12,000 a year, which averages $1,000 every single month. To answer the very first question of how much money will you need to invest, we'll have to understand this easy math first. And if you do, you no longer have to watch any other YouTube video on making passive income through dividends. Alright, the ease of math goes like, as we are planning to get a dividend of $12,000, we'll simply divide it with your portfolio's dividend yield. And that would give you a quick estimate of how much money is needed to be invested. For example, your dividend portfolio yield is 4%. Divide it with $12,000 and you will get $300,000. So you will need to invest $300,000 to get that $1,000 in dividend every month. Now this is the quick way to calculate and get started with your journey. But I'm gonna show you two different ways you can reach there, and you will have to decide which one works better for you. The first and the most prominent way that I personally follow is choosing companies with lower yield but higher growth. To elaborate this down, let me show you some calculations. In this case, where your annual dividend yield is 3% with a dividend increase of 1% annually and 8% stock price appreciation, with those numbers it will take you 11 to 12 years of investing to achieve that $1,000 of dividend every month. This calculation was made up on the assumption of you investing $1,700 every month, or a sum of $20,000 annually. Now please don't let this scare you. Let me show you the scenario in the bigger picture. Assuming you follow this pattern and make that $20,000 investment for the next 30 years, at the end of 30 years you will be the owner of a portfolio worth $4.5 million, paying you a sum of $1,84,000 in dividends every freaking year. With little more than a decade, you'll cross that $1,000 dividend every month mark. But after that, your investment will start snowballing and make you wealthy in the coming times. So this is the method 1, where you go with the companies that yield low dividends but have a higher growth acceleration. The second way is a little bit riskier, but the rewards here are much bigger. I personally won't go with this one, but yeah, many people choose this route and maybe reach their goals much faster. Basically, this is a method wherein you will chase the high yielding dividend stocks. Let's get back to some calculations. In this scenario, you will be investing $500 a month or $6,000 annually with an 8% dividend yield and a 1% dividend appreciation, but only 3.5% share price appreciation. It would take you 12 to 13 years to reach that $1,000 a month in dividends. Now I know you must be saying it's just $500 a month of investment and not $1,700 like method 1. I'll get back to it in a moment, but in this case, after 30 years, you would be a owner of more than $1.7 million, which pays you a dividend close to $200,000 in annual dividend income. Now coming back to the point of why not to choose this method, as it is way more doable and seems to be realistic. Well, it's because it might seem realistic, but it is not. For most companies, it is not sustainable to pay a high dividend yield like 7 to 8% every year. I'm not saying any company could not do that. I'm sure there are a few who can and maybe will continue to do that. But for most of the companies, they just cannot. So it's advisable to look in the long run instead of falling for the glitters. Also, I would like to add another scenario of investing $1,700 monthly or $20,000 yearly at 8% dividend yield and 3.5% of appreciation in the shares. It will still take you 6 to 7 years to reach your goals of $1,000 in dividends monthly. Well, all of this scenario is made up just to make you understand the game. I already explained why method 1 is much more realistic and safer compared to going for the high dividend yielding stocks. If you are still not clear with why you shouldn't, search for it on YouTube and you'll get your answers. Now in method 1, at the end of 30 years with a $20,000 annual investment, you will end up with a portfolio of $4.5 million with a $1,84,000 of annual dividend income. In the second case, no doubt you will get a higher annual dividend income of high as up to $200,000 annually, but the value of your money will be decreased to only $1.7 million. Also, will the company continue to pay that high dividend yield of 8% remains a big question. which it usually doesn't. To conclude, I'll say no matter what you do, it will take you years to get that $1,000 in dividends monthly mark. Considering the fact that you ain't a multi-millionaire planning to dump millions of dollars to get some passive income. It's all about proper knowledge and patience, and you'll surely get there. Make sure you don't listen to YouTubers who claim to get you that $1,000 in dividends in months, if not years. Stay wise and keep investing. I believe in you. If you found this video valuable, please consider subscribing us and like for the algorithm to know that this is some valuable stuff. I'll meet you soon in some other quality content. Till then, keep hustling. 2021 has in all probability continued being the weirdest year that I have endured in ever since I started investment several years ago. Currently, I gotta say I feel sorry for those new investors across the globe out there entering into the stock exchange with the dream of making tons of money and succeeding. As a result, it's extremely exhausting to navigate these dodgy waters and try making errors that can kill your career before it even takes off. To help you understand this tough game, which eventually gets easier once you understand the basics, I'm making this video. Well, it is not possible to make you a stock genius in one video, but what it will do is get you on the right pathway to investment throughout the volatile times. Here I am planning to share with you 5 tips that I learned from the investing kings like Warren Buffett, John Templeton, Benjamin Graham and many other legendaries. These genius investors use them to beat different investors and win the long-term game. Let's dive straight into this elixir. As Warren Buffett says, he invests in the companies that he understands, and he simply doesn't if it's too fancy and hard to understand the business model. Also advice from Jeff Bezos that he makes investment based on if the company is going to change people's lives. This billion-dollar advice is as complicated as easy it seems to be. Picking up stocks of a company which makes sense to your mind and not to any stock guru is the key. It would be really easy to hold stocks of a company who shares visions and thoughts similar to yours. Don't just pick random hot chips from the market. Instead, take a step back, think of a sector that you are interested in. For example, if you are a young guy, artificial intelligence would be something that fascinates you. Find companies in that sector, check out what their future goals are, do some research about their management and CEO, try understanding their business model. Once you get these basic things done, dive a little into their technical stuff, and after a healthy research, you would end up with a handful of brilliant companies and then start nurturing your investments. Once you feed this easy yet complicated ideology in your mind, you will end up winning the long-term game. Key takeaway point from this tip is finding a sector that fascinates you and investing into it will be much more profitable and interesting than buying stocks of hot trending companies that you don't know a fish about. Let's take a scenario. Suppose your crush likes guys who play basketball and now you gotta impress her with your basketball game, but unfortunately you have never played a basketball game before. What will you do? Considering you're a sane guy, you will start learning about the game, its rules, its history, the best players it had. Basically, you will learn some beginner skills, start with some practice matches, and then one day all the efforts will bear fruits and your crush might end up being your girlfriend. But you should have got the idea of what I mean to say. You would be shocked to know that many of those investors out there don't even know simple techniques and fundamentals of investing. It's just like betting thousands of dollars on the poker table when you don't even know how poker is played. So make sure you're clear with your fundamental concepts before jumping into the game. Clear your basics by learning about stuff like PE ratio, return in equity, things like limit order, stock market order, stop limit order, etc. Knowing this will already give you a plus point, placing you above a majority of those dumb investors. Emotions are an important aspect of who we are as humans. However, emotions can be problematic when it comes to investing. Investment decisions are primarily a mathematical exercise, but investors frequently allow their emotions and biases to play a role in their investment decisions without even realizing it. Unfavorable investment decisions have been linked to bad outcomes in the last 2 decades, according to empirical research. Outlook that the vast majority of financial backers take on when they see their stocks go up is they feel glad, they go tell their companions at the bar how much cash they made. They check their stocks week by week, if not day by day. Their feelings are completely up to the speed in the good and bad times of the security exchange. Anyway, the little percent of financial backers that do the best are the one who do something contrary to what those folks do. The financial backers that success are really cheerful when their stocks go down, in light of the fact that it implies it's gotten less expensive so they can purchase more at a modest cost over the drawn out. They know the less expensive the value that they become tied up with the stocks, the higher the profits will be. This is a direct result of this accurate idea that Buffett says, "You're managing a ton of senseless individuals in the commercial center. It's anything but an extraordinary enormous club and every other person is drinking. Purchase low, sell high tragically." Most financial backers do the inverse and win the game. Never let any predictions or speculations get into your senses. This will sound pretty common to your ears, but this is as important as breathing when it comes to investing. So take a marker and write it on the walls of your brains. Never ever let predictions or speculations of any cocky broker, investor friend or any other person get into your mind. Every time there's something flashy, too good to be true, get super alert and take a step back and research. As the famous investor John Templeton says, the four most dangerous words in investing are, "This time it's different." You need to understand that stock market doesn't work that way until you are looking for a high risk gambling, and if that is what you are looking for, you should better flush that money into some casino where chances of winning is higher, plus you will get a lot of more thrill and excitement there. While investing, the less fancy, the more profitable it is. Sticking with the fundamentals, letting your investment compound and constantly gaining more knowledge will take you towards your destination. Avoid mistakes that almost every investors make and you would be making big money next time the market crashes. Remember, don't run behind the glitters as they are not usually gold. As we have made it to the last segment of advice, I have something really important and special advice for you guys. This single statement can prove to be the game-changing factor in your investment career. Most of the investors and guys out there think investing is a one-time effort. Once you do some healthy research, find an excelling company to invest in, you're done. Just wait for years and you'll be a billionaire. To be honest, this ain't true. You will have to be up to date with your company's day-to-day activities, like what short-term goals did they set for, let's say, next 3 months or next 6 months. Is there any change in their management? What resolutions have been passed in the recent meetings? Are there any new rivals in the market? How will be the company performing in the upcoming few months, etc., etc. Those small decisions will ultimately pile up and give you that humongous compounding result that you can't even imagine about. In just when you invest in the companies, you become an owner of the company, no matter how small. You will have to take care of it as of a growing child. You need to pay attention to what sort of friends he hangs out with, how good his mental health is, are there any sort of problems that might bother him, and that's how you will raise a child that might change the mankind for betterment. Now you know what I mean by constantly updating your knowledge. Well, this is it for today's video, and this 5 pro tips will definitely help you go a long way ahead in your journey. Start early, make little mistakes, improvise them quickly and learn from them. Good luck with your journey. I'll meet you in the next video. Till then, keep hustling.